So I'm trying to activate the live. Yeah, we are live now. So good evening, good afternoon, good morning from wherever you guys are watching this video from. Uh, Today we'll be talking about market structure. So let's just go to a book that was written by one of my teacher. His name is Smart Money Rich, SMC Rich. So every market has three phases of trade. Basically, we have three phases of a market. So those phases are what make up the market trend. So firstly, we have the uptrend, we have the consolidating market, then we have the downtrend. A trend is a tendency of price moving in a particular direction over a period. A trend is just like the structure, like market moving wave, name the trend. Shey you get? So now every market phase has its own trend. Like we have different trend. We have the uptrend, we have the downtrend, and we have the consolidating market. It's just like, let me use this as an instance. What is currently trending? You guys will say it is the iPhone 16 that is trending, right? Yes, iPhone 16 is the current iPhone trending. Everybody wants to buy an iPhone 16. You want to buy an iPhone 16. I also want to buy what? An iPhone 16. Shey you get? So that is the current trend. But by September, another iPhone will be out, which is what? The iPhone 17. Then iPhone 16 will no longer be what? The trend. It won't be what everybody wants to buy. So now be like, so iPhone 17 will now be like the current trend of September till next year, September again. So exchange is just different phase of market. What is trending at a particular time? Is it an uptrend, a downtrend, or a consolidating market? So and it says that a trend is a tendency of what? Price moving in a particular direction over a period. Trend can be long term, short term, upward, downward, and even sideways. Just like I said, we have the uptrend, the downtrend, and also what? The consolidating market. This consolidating market can also be called a chubby market. In case if you are seeing anybody doing a video on YouTube or anywhere, and the person is now mentioning chubby market, rangy market, and you are not like, what is a chubby market? What is a rangy market? They are also the same as consolidating market. So to now form that particular market structure that you guys see, that my particular market structure, we always have what? Two things. So market is programmed to do two things when creating that structure. It's programmed to what? Move impulsively, then what? Correct that move. Why? Why is this correction happening? It's because whenever, let's put an instance, you are buying an iPhone. Let's use an instance, an iPhone 16 is 1 million naira. And I am a retailer. I sell, I buy and sell from the wholesaler and distribute to people, to the final consumer. So what will I do? I'll buy iPhone 16 for 700k, sell to people at what? At 1 million. So that 300k difference is my own profit. That's my gain. So whenever I'm selling and taking out profit from the market, you will see something like this happening. So when price move, check. Are you asking a question?
No, 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 no.
Okay, so when price move impulsively, we all expect that okay, it will get to a certain period or a certain point where people will take profit. Those people that bought early, those early buyers, they will be interested in taking profit because the aim of every business individual or any business person is to buy when the thing is cheap and sell at an higher price. And that's difference between the buying price and when you are selling it is your what? Your profit or your loss. We'll get to that in our next when we are talking about more of demand and supply. So you get. So now price move impulsively, then it will have to what? Correct that particular move because of what? Profit taking at this point. So price will now create impulsive correction, impulsive correction, impulsive correction, like that to form that particular upward trend or a what or a downward flow or what or a chubby market. Like this, I said an uptrend, downtrends are made up of two key components, which is what the impulses and the corrections. Just like I said, the impulsive move, that's the aggressive one. Then the what? Then the minor move, which is either the correction or the what? The pullback. We can view the impulses and correction as swing structure and substructure. You can also name people can also call it swing structure or what substructure. Like this is the swing and this is the substructure. The swing is always the long term move. Then the correction is like the substructure. It is a short term trend. The overall direction of the larger trend is the swing structure. Like where is the market heading to? Who are more in power? Like we have the bullish and the bearish because it's always between the buyers and the sellers. But when the buyers are more, you see the markets moving up aggressively. That is, though impulses to the upside will be more than those corrections to the what to the downside and the pullback. Moving happening which within each correction is a similar smaller trend itself. Name substructure. Let me give this thing a brightness a bit so we can all see. Yeah, I think it's better now. So now this is just like the swing structure and what the substructure. The swing structure. This now I'll call this a what a downtrend. Why? Because market is moving down aggressively, moving up, not really giving that vibes of an up move, then coming down aggressively. Let's show that in the chart. Let's see how it looks like on charts. Let's see. Let's try to look for a trend. Let's see. Let's try to identify a trend. Yeah, look at gold. Look at gold. See what gold did. Let's start from here. See what gold did. So this particular trend, I will call this an uptrend. Why? Because let's see how it moves. We're having something like this, impulse to the upside, a minor downward move, impulsive to the upside, a minor downward move, impulsive to the upside, minor downward move. Then this now, we'll just count this as one move. Cause why? Price didn't create a new high here. Price did not create a new high here because we are expected that what for an uptrend we must be seeing series of higher highs and higher lows, something in this nature, nothing more. A high, a low, higher high, higher low, higher high, higher low, higher high, higher low. Now what the price did here, price give us a what, a lower low. It now give us a what, a lower high. So this is still what, an uptrend. Because in an uptrend, price is meant to what, take out these lows. They are called the weak lows, the strong lows rather. Price is not meant to take out these lows, rather take out the high, these highs. So price is expected to take out all the highs in an uptrend because the highs are what are called the weak highs, while the lows are called what, the strong lows. Price are expected to take out every high in an uptrend, creating a new one while leaving the lows intact. So let me try deleting this. So now this we'll call this a what? A one move. This is like an internal. Why? Because price didn't take out this high and also didn't take out this lows. So this structure is what? An internal structure. Then around here we have what? A lower low. expecting price to create a what? A lower high, something like this, and create another lower low. But what the price did, it didn't create a new low for us. Then it gave us a what? An higher low, telling us that what? I'm not ready to sell yet. I'm still in what? In
Buying
business
position.
of buy. That is, the buyers are more in the market. Yes, the buying pressure is more. Same thing around there as well. Keeps moving up, moving up, moving up, till somewhere around there when price came down, give us something like this. This is now what? A downtrend before entering into a consolidation. This is was like a what? A downtrend move before entering a consolidating period. So using swing structure and substructure, swing structure and substructure can both be traded as their own independent trends. That is, you can trade the major trend and what and the minor trend. What are the minor trend? Those minor trend are those correctional move that market creates. You know, after it creates an impulsive move, it will also create a what? A correctional move. So you can take advantage of both trends, the impulsive and the what and the correctionals. That is, if you are trading the correctional, it will now be like a counter trend. There's a way we trade that. It's called counter trading. So you are trading against the trend. Something like this. This is a diagram. Swing structure is bearish. We can use market efficiency concept and supply and demand to sell when price is a POI. POI means point of what? Of interest. That's the meaning of POI. You don't know. So now, this is like what? A bearish structure. This is a bearish structure. Looking at this trend, this is a bearish trend. But we want to take advantage of what? Of the impulsive move and the what? And the correctional move. Normally, if I am to take this trade, I would have just waited for what? For this particular sell period and what? Take it. That is, we are trading in line with the trend. But another thing can happen again. Let me just say, okay, I just want to maximize this trend. I know that for every impulsive move, there must be a what? A correctional move to correct that particular impulsive move. Because a lot of people will be taking profit and market will be forced to pull back a bit to give both buyers and sellers. So those people that miss that trade, first entry, can take from what? The second entry. So now I've seen this impulsive move. What I will do is, maybe this is on, I'm seeing this particular impulsive move to the downside on daily time frame or 4 hour. What I'll simply do is go to my 1 hour, 30 minutes, 15 minutes to spot a change of character. What is a change of character? That is, market is now moving from the from the selling pressure to the what? To the buying pressure. I will teach you guys in our next class of market structure, because this market structure will be divided into three. When I'm teaching break of structure and change of character, I'll teach you guys how to spot this thing and what change of character means and what BOS means. BOS simply means break of structure, and change COCH, which is chalk, which I call chalk, called a change of character. That is, market is changing from the bullish move to a what? To a bearish move. So what I'll simply do is go to my 1 hour, 30 minutes and 15 minutes, try and spot a what? A change of character, which in this scenario, I'll say this is what? The change of character around here. So what I'll simply wait for is what? After seeing this second move, I'll mark it as what? As my break of structure. That is, market is already moving to what? To the upside. This is minimum of two. One, this is a low, a high, lower high, higher low, then what? A new higher high. What I will expect is what? A new higher low. Try to spot out my what? My other block. Look for other conference like liquidity, and the rest. Then mark this as my what? Break of structure around here. Then I'll enter for this buy. Exit at my nearest high. Let's assume this is my 4 hour high, my 4 hour supply zone that I'm expecting myself from. Then I'll wait for this sell at this point. Then also wait for price to mitigate that particular the supply zone, go to lower time frame again, repeat same thing I did here, spotting this on 4 hour, going to 30 minutes, 15 minutes and 1 hour to spot another change of character. After marking my change of character, add other confluence like what? My other block, liquidity and so on. Then try to spot it and also dunk the sell. So that's the way of what we are trading. Let us even look for a chart
Yeah.
example of how this look like. So you guys can see a trader has both. So now let's try. Okay. Hmm. Is it good? Should we check it on good? Or let's see. Good should have. I'm looking for the one that is a bit clean for us to learn this thing from. Aha, this particular one now. Let me circle this. Let's see what we can get from this place. Whether we get a clean example of what I mean. Clean example of what I mean. So for me now, I know that this market is what is an up in an uptrending market. This is a high. So what will I be expecting? I'll be expecting this low to be created. Then what? Price moving up and creating a new high. Then what will I do? After
Yes.
seeing this impulsive move, I know that I'm expecting a buy somewhere around here. I'm expecting a buy somewhere around here. Let's say, okay, this will be my buy spots.
Other
And I also know that price is ranging here. It will buy here. I'm expecting a buy from this level. My buy is here. My buy order is here. So I can also maximize this particular sell move in order to make money. This one. Then I'll try to spot another block around here. Let's say this is it. I'll try to spot it and wait for price to mitigate the level. Then sell this bad boy down. So this is just like a what? A sell to buy. So now I've maximized the sell and the buy. This is I know that market is in an uptrend because for me market is moving towards the upside towards
downside.
the up. Yes. You said what?
Like it's moving towards the downside for correction now.
Yeah, so now market is moving in an uptrend. So this one now is just the correctional move. I know that market will do this. We've seen a high, and now I'm expecting price to create a what? A lower high before creating a what? A new higher high. So now this is the higher low I'm expecting. But I know market will come here. But before
Yeah.
market will come here, are you getting it?
Yes. Yes.
So now I know that this market will buy. This market is a buy market.
Yes.
But I know that before this market will buy, market will have to come here. And I can see that this market, I want to maximize this particular sell. Before the market will come here, it will take some time. So I can easily join this sell, make money from this sell. This sell will just be a short sell. So I'll be risking half of my risk on this place. At this place, it will be like a scalp because I know that
Yes.
market will
Yes.
have to come in before the buy. So I'll just quickly scalp this sell before my initial buy. So I'll be risking um half of what I'll be risking on this particular chain. So if I'm risking $100 on this buy setup, I'll just be risking $50 on this sell setup. Reason because it is a short one and anything can happen. Shey you get?
Yes.
Anything can happen. So you just risk a little and what wait for your major trend. So now you've made money from the sell and for any reason, if this particular buy become a loss, this sell can easily cover up for your what? For your loss. I don't think you are getting it.
I get.
Yeah, so that's how to what? You make money from the swing structure and also make money from the what? From the substructure. But as simple as it looks, you just have to what? Align it with market structure. So market structure is something you learn continuously. You can't just say, I'm an expert in market structure. Maybe you learn market structure, one video, two video, you say, no, yeah. No, you keep learning every day, consistently. Because markets is not something that will just give you clean setup every day. No, you won't see clean setup every day. So every day you come up to your chart, try to identify market structure. That's your first thing to do. After checking news, maybe fundamentals that might hinder your trade for the day, what I want you to do next is what? Go onto your chart, open it wide, go on to higher time frame, open it wide, try to read what the market is telling you. What is this particular trend? Once you can identify the market structure, firstly, you will be at least 70% of your trades will be wins if you can identify market structure, because you are knowing you'll be able to anticipate what the market might do next.
Yes, yes.
So market structure, first and foremost, important aspect of what market flow. Like I said, half of technical trading is identifying market structure. That is half of it. Can you see half of anything? Once you can identify the market structure, what is it doing? You can identify that okay now this market is an uptrend. What you should come to you is opportunity to buy, not that you are seeing an uptrend and you are looking for opportunity to sell. You just blow your account. So you have to firstly what? Identify the
The
particular trend
market
or
structure.
the market structure. This is the art of identifying trending direction of market so that we can trade in line with it. Like they said, the legends will say, the trend is your friend, trade in line with the what? With the trend.
Yesterday now.
So now to identify market structure, we focus on high and low points in markets and how price is reaching to these previous highs and lows. So like it's how price is moving, creating either higher highs and higher lows or lower highs and what? And lower lows. Just like we have here, you can see an uptrend creates what? Higher highs and what? Higher lows, like series of higher highs and higher lows. And downtrend is also what? Creating series of lower highs and lower lows. We have impulse and what? And pullbacks. Impulse swing structure, pullback internal structure. I've explained this. So this is like a diagram example of an uptrend and a downtrend. I've showed you guys this on the charts. Then our next topic will be break of structure. Maybe in our next class, we'll be treating break of structure and change of characters. So let's just see what we have on gold today. I send the chart to my WhatsApp group for you guys to see. Currently, gold is we just say gold is ranging on 4 hour time frame. Gold has been ranging for some time now. From April, gold has been ranging, but we are able to spot a buy on gold. So hopefully, if we dunk this buy, this is I think a 1:8 risk to reward ratio. So if you are risking $100, you should be getting $800 return. So what makes me take this particular trade? Let's just do a trade breakdown of this trade. Currently, gold is ranging, but I saw that on 4 hour time frame, we've seen market creating something in this nature. So it was moving downwards. We are having something like this. So if this was to be a downtrend, we should be seeing what series of what's in a downtrend. Series of what should we be expecting in a downtrend? Hello, can you hear me? Bolu, can you hear me? I don't know, my phone. So let me just explain it. So we'll be expecting what? Series of lower highs and lower lows, something in this nature, lower highs and lower lows. But at this point, market did what? A change of character, shifting from what? The downward move to a what? To an upward move. They will have something like this. Then market is moving what? In an upward move. So now, what make me take this trade is I've seen a break of structure telling me that what market is now moving in an upward move. This market might get to this particular high and drop, but for now, this buy is still very very valid and what active for us to take. So I spot my break of structure, try to look for imbalance. These are imbalance. Market inefficiency, they are also called imbalance. So those are places those smart money place their order. So after this candle, those smart money were taking large orders of buys. So that was why we see this particular market inefficiency or imbalance. So now market is programmed to do three things. Market is programmed to liquidate, that is take out all those liquidity, then mitigate, going to go and test another block and also rebalance places like this. So now what I'm expecting is what? Market to liquidate this liquidity. These places are stop losses of retailers around here. So a lot of people have been buying from here and their stop losses have been below this particular low. So market needs to what? Liquidate all this liquidity, rebalance this imbalance, then mitigate this particular zone before going up, and also doing same thing, liquidating this place, rebalancing imbalances here, then mitigating this zone. So what I'm expecting, what is making me to buy is also what is making me to what? To take profit at that particular high. So this trade is very valid for next week because this week is gone already. This week is gone. So by next week, hopefully, we're able to dunk this particular gold. And gold is where I only have set up for now. Then let's try to check news we have on Monday. Do we have any news? No. Tuesday. Few USD news. I don't really trade card that much. I don't really trade currency pairs. I mostly based on gold. But once in a while, I trade currency pairs. Then the pound. We're having inflation rate on pound on Wednesday. Hopefully, we might take a trade on Wednesday for this pound. Then FOMC minutes. So I think from Wednesday till Friday, we should be having news. But Monday, Tuesday, no news. But this trade is very, very active for next week. Let's make this buy for next week. The one is to it. So I'll be ending this live now. We'll join again maybe in our next class. We'll be talking about break of structure and change of character, which is the CHOCH and the BOS. Then I'll be explaining more on it and how we can use it to trade, how to identify them on the charts and make money from them. So guys, like this video, subscribe, turn on notification bell so that YouTube can recommend this video to as many as possible who are struggling in market structure, so they can be able to make money with us, learn how to identify market structure and don't eat stop loss again. So bye guys.